The wealthmanagement.com Advisor Innovations podcast is sponsored by LPL. As financial advice continues to evolve, LPL is at the forefront. Whether it's growing your RIA or building an independent practice, advisors can pick the business model, services, technology, and product mix that best meets their clients' needs. As a top wealth management firm 100% dedicated to advisor success, LPL looks forward to learning how they can help you build your tomorrow today. For information and show notes, go visit lpl.com/advisor innovation.
Hello, everyone, and welcome to the Advisor Innovations Podcast. As most of you hopefully know by now, this podcast is really just an excuse for me to sit down and have conversations with individuals inside the wealth management industry, pushing it forward in unique and interesting ways. Today, I'm thrilled to be joined by Carter Gibson, the leader, M&A Solutions, Succession Planning, and Protection Plans at LPL Financial. Carter, thanks very much for joining us.
Hey, David, it's great to be here and great to talk about one of the hot topics out there in the market today, M&A and succession planning.
M&A and succession planning is indeed a hot topic. I don't think there's a day that goes by that we don't see another story about one advisory firm buying another advisory firm, joining together with an aggregator or a larger team. It's flowing. So before we get into it, why don't you just give us a sense of where you sit and where you and your team sit in the LPL ecosystem and what your responsibilities are there?
Absolutely. Yeah, happy to. So if you think about LPL and what we've been trying to do, or the evolution of our services over the last several years, is really find ways to step in and help advisors run extraordinary businesses and to take as much of the work on from them as we can so they can spend the time with their clients and spend the time leading and growing their businesses. And so part of that evolution has been building out these different business services, including M&A and succession planning. And so what my team seeks to do is really be that trusted professional expert for advisors and help them go realize their goals, whether it's growth through M&A, whether it's planning for their eventual legacy and finding that right partner, or just any other aspects that they may need in M&A and succession planning. And we do that all day, every day. So I'm really excited just for my team that we get to go out and help all these great advisors go really achieve their goals in an area that's typically been something that they didn't have great support in, right? If you're a business owner, you're wearing all these different hats, and you can't be expected to be an expert in everything, especially something like M&A or succession planning, where you may only do that once or twice in your whole career. But we do it every day. And so it's really exciting to get out there and bring that professional support for our advisors.
Yeah, that's great. And definitely a need, as you say. I mean, independent advisors, I guess there are consultants out there and there are some folks who can advise on M&A, but it's spotty still, I think, for a lot of them.
Absolutely. Yeah. There's a lot of consulting out there in the industry, which is great. But it's also nice to have someone at your home base, right? So LPL being your broker, dealer, and custodian, they can help you with all the nuts and bolts and the planning from end to end, not just for a transaction or even for just a specific event.
Sure. For someone sitting adjacent to the industry, as you say, we have seen the rise of M&A in the RIA space, in the independent advisory space, take off dramatically in the past few years. I think every year has been another record year for M&A in the industry. No matter who you talk to, I think all numbers point that way. What's driving it? What's driving this M&A activity? Why the flurry? Why the pace? Why the ever-expanding multiples that seem to be being paid for firms? What's going on? What's driving this activity?
Yeah, absolutely. We're in the middle of a massive industry dynamic here, which I think we're all aware of, but just to state some of the numbers that we see out there, looking at Cerulli or the other reports, something like a third of all financial advisors are going to be retiring over the next decade. So you're looking at 100,000 plus advisors that are going to need to find a way to transition their business. And then beneath that, right, most of them don't have a great partner or someone that they've identified as that great partner to be the exit plan. So if you, again, reading the industry reports, something like a third of advisors have a written succession plan. And even those that have a written succession plan, less than that third believe it's something that will really get executed at the end of the day. And so that's creating a lot of opportunity on both sides, right? One, we've got to make sure that we give those legacy-oriented advisors that great outcome that they deserve after running their business and serving their clients for so long. But to do that, we really need to have great buyers out there in the marketplace. And the evolution that we've seen, especially over the last several years with the entrance of private equity money, of the growth of these consolidators and large aggregators, as well as even groups like myself, where we're trying to step in and help support this need on both sides. It's just been really, really interesting to see the growth of M&A. And to your point, it's accelerated every single year. We don't see that slowing down because the advisor, the average age out there is approaching 60. And they're not getting any younger, and they're still going to need to do the planning at some point because they will have to transition.
And how do you see the dynamic playing out? Are there enough buyers for all these sellers that are looking to monetize their practices?
Oh, it's really interesting. Yes, if you look out there, I think you hear numbers quoted. Sometimes there's 30 or 40 or 50 buyers, maybe more for every single seller. So I don't think there's not enough buyers. The challenge is finding the right buyer. So we could show up and have 50 people come bid on your practice, but that doesn't mean that those are 50 great partners for you. And so it all comes down to helping the seller and also preparing the buyer so that they can meet and figure out, do we have a cultural match here? Do I approach the way that I run my business the same that you may approach the way you run your business, and how I serve my clients, maybe the kind of clients that I serve. And so it's really about finding the right partner. That's the challenge.
Yeah. And do you all make a distinction between succession planning and sale planning? Is there a difference there? I mean, I think as these independent firms grow larger, right, they become professionally managed businesses, and maybe a succession plan isn't really what they're looking for, but they're looking to grow with capabilities that can only be really accessed by joining or selling to a larger entity.
Sure. And I think, depending on what you're talking about, whether it's succession planning, exit planning, continuity planning, the main thing is really just the planning aspect of it, right? So to your point, it will be different depending on the kind of practice you have. If you're, a sole proprietor, that's going to look different than if you're more of an enterprise or an ensemble level group where you've got other partners there in your firm. But at the beginning of it, it's all planning. And so it's really about how do you determine what are the goals, outcomes, objectives that you're trying to work towards as a business owner and a leader, and then making sure that you have the planning that can support you for the eventual exit, whether that's a sale or a transition or otherwise. But also that interim planning too, what we call protection at LPL, where, let's say you have that unplanned event happens, knock on wood, you get hit by the proverbial bus. And what happens to your business, and how do you maintain that continuity of client support? And so it's all about the planning.
And on that protection planning front, and we won't spend a lot of time on it, but just a small sidetrack, there's a regulatory element there, right? I mean, have we heard of the SEC becoming a little bit more aggressive in terms of looking at RIA's protection plans in this way?
I mean, the SEC and all the regulatory bodies, they're all definitely looking more closely at a number of different factors. I wouldn't pick on this one in particular, saying, "Hey, this is a hot topic item." But I'd say, like anything, it just comes back to that planning, right? You want to make sure that you're planning to transition your business or maintain the continuity of your business in a way that's regulatorily compliant, and that's why getting that professional support and doing the proper planning ahead of time, that's it's key to success there, because we've seen a number of instances, right, where that planning is not in place and the worst happens. And that just creates all kinds of challenges at a time that's really, really stressful and important for that advisor or their family to be focused on maybe medical or health needs and not focused on, hey, how do I figure out how to either monetize or transition my business? It's just that planning is just so key and crucial.
Yeah, I mean, it seems you think about this with your own family, right? You have insurance and plan for contingencies, risk management. Seems that's what advisors should be focused on with their own clients, right?
Absolutely. Yeah, it's exactly that kind of planning that they do for their clients every day, that we want to make sure that they're helped and supported in doing that planning for themselves. And just like anything else, the more you plan, the better your outcome will be. And the earlier that you plan, the better that your outcome will be, because you have more time to adjust and define and get prepared for whatever that outcome may be.
Do you think that advisors are giving enough runway for their succession plans? Or is this the sort of thing still, which is what we used to hear all the time, that advisors waited to the last minute before they thought about, well, I guess I got to gussy this place up to sell it now. Are advisors getting better at building that off-ramp, giving themselves enough roadway to do it effectively?
I think we're seeing a significant increase in the conversations that we see over here with my team on advisors that are trying to go through that planning process. And I don't think it was so much that advisors just weren't doing the planning, it's just they didn't have a great outcome or a clear path to go work towards, right? If you're a independent advisor, sole practitioner, and you're in the middle of Iowa, it may be harder to find someone there that's actually going to be that great transition partner than if you're, say, in New York City, where there's, probably 1,000 other financial advisors nearby that you could potentially be connected with. And so I think it's more about how did we create that ecosystem and that openness across LPL or just wherever those advisors may be, so that they can identify those right partners easier, and then have that clear support to go execute something like a succession plan or a eventual practice sale. Because again, come back to that comment about advisors wearing 1,000 hats. If you're busy serving clients every day, trying to deal with market volatility, run your business, manage your employees, grow your practice, and then on top of that, you say, hey, and by the way, you need to go find that person to sell your business to. It's a lot. So it really comes down to just creating clear roadmaps and then facilitating that matchmaking, so to speak.
So one of the things that we hear a lot about is the fuel that's fired a lot of this activity is the private equity money, outside money. Minority investors have come into the space. They've really, I think, recognized wealth management as good, sticky revenue, good margins. So there's a lot of investors circling around. How has that kind of fueled this? And is it excessive, or is it opening up new opportunities? What's your view?
Yeah, no, so I think what you highlighted there is it's taken a long time for maybe more of the banking, traditional finance side to figure out that the wealth management business is actually a great business. Where in the past, back my experience back 2 decades ago, I did commercial lending. I actually banked some financial advisors. So I've been there and done that. But it was really challenging. But when you look at the business, right, you have really strong recurring revenues. You have incredible client stickiness and engagement, and long-term growth, right? So it speaks to the wonderful businesses that our advisors have built. And now the capital is catching up to that, right? So to your point, you're seeing private equity money come in much more significant ways. Different other options, maybe it's minority investors or large aggregators or consolidators. So there's just a lot more options out there in the market now, which I think is a good thing, right? Because that creates competition in the marketplace that also gets advised better options or just at least other options rather than in the past. If you go back 10, 15 years ago, you pretty much had sale. That was your only way to monetize your business. And there really wasn't much in the way of growth capital, where now there's a number of different avenues for an advisor to either get capital to grow, or to monetize their business in part or in full. And so I think I view it more as an opportunity for advisors. Now, with that opportunity does come complexity, right? So it's not just now like, hey, do I just take that bank loan? It's like, well, if I'm going to bring in a minority partner or think about a different capital structure, you really have to understand the details. So it's not just understand the details of the transaction, but understand like, hey, who is my partner? How do they think about growth? What are their goals and objectives? Am I aligned to that? What's their time horizon? All these other considerations that maybe it was simpler in the past when you only had the one capital option, but at least you have more options now. You just get really clear on the details and make sure you're aligned as a business owner with whoever your capital partner may be.
Let's say that I'm an advisor in the LPL network, independent advisor in the LPL network, and I've kind of hit that wall of that plateau of 300, 400 million. And I'm looking to make the next step. And as you say, there are plenty of folks around who are willing to invest in my business. Will you help them understand the cap tables and the investment structure and the obligations and what does that look like from your perspective?
Absolutely. Yeah, that's exactly one of the components where we want to show up, whether that's the growth of capital, the legacy planning side, on just helping advisors understand their options and also consult with them on how they could go about approaching them. And one of the other things that's really interesting about LPL is we actually are also a capital provider. So if you look across, whether it's advisors transitioning to LPL, growth lending, acquisitions, succession planning, LPL is funding, several $100 million a year in support of advisors. And so that's another place too, where we can provide options from an LPL perspective for our advisors to help them, again, whether it's growth oriented or whether it's executing that succession plan and providing the capital needed to get the transaction part of it done. There's a lot of options out there, and we want to make sure that we're providing some good options to help support the advisors as well.
Do most advisors or many advisors or any advisors go into this process too optimistic about the value of their business? And are many disappointed when the numbers get crunched and the spreadsheets are opened and the trunk is opened, or whatever analogy you want to use,
right?
And find that maybe the business is not as valuable as they thought it was?
Right. Yeah. And that's a funny topic because we probably most conferences that I participate in or groups, price multiple is typically the very first question that gets asked because you see some just eye popping numbers out there in the market today.
Mhm.
I mean, it's exciting, right? Like if you're a business owner and you built a business and you're seeing these massive multiples out there, that just gets you really pumped for the business that you built. It comes back to that earlier conversation of just, you got to really understand the outcomes and objectives, right? So if you want to sell your business and walk away, that's going to be a different valuation than if you're sticking around for a number of years or you're going to help drive growth in the business. And what kind of business it's going to look like afterwards, right? Like if you've built, like, let's just say I had my own practice and it was Carter Gibson Wealth Management. Is that brand going to stick around? Am I still going to be the guy, so to speak, or the leader? So there's a number of different components that can drive value. And so I think it's not so much disappointment, but it's more of like an education process of going through and saying, hey, like these things drive value. These things can raise the multiple. These things can reduce the multiple. And just, again, making really sure that the advisor understands the outcome that they want. Because if your goal is like, hey, I'm 70 years old and I really want to get out of this business. And then you go and say, but I want the very highest price. Well, the very highest price is you're sticking around for 5 or 10 years and driving growth and potentially rolling over some of your own equity into this new company. So you just got to be clear about that. And so I'd say most of the time, once we go through that due diligence process with an advisor, it's much more clear on the outcome that they want. And then can the transaction or the monetization support that outcome? And I think we're seeing a lot of happy advisors out there once we do get to that point.
So listeners will want to know, so I have to ask, can you give a ballpark range of multiples that you're seeing in?
Well, that's what, so I'm not going to prognosticate there or share the numbers because again, they're too shiny, right? I mean, you see double digit EBITDA multiples out there and that's great. Like the businesses are really valuable, but just realize, right, that it depends on the outcome for both parties, the buyer and the seller, that drives that multiple.
Yeah. And this is why I ask about that roadway question, because I think a lot of advisors tend to wait too long, is what I'm saying, and the book starts to it goes into depletion mode rather than accumulation mode, and that's probably not the time to really look for maximum value in a practice, right?
Sure. Yeah. I mean, just all those things that drive value, the longer that you have in the planning to maximize the value, the better. And one thing I'll say too, while we're on the value point, is what I've really appreciated talking to, at this point, hundreds and hundreds of advisors about their exit planning and M&A, is most of them aren't actually seeking to maximize the valuation, right? So the benefit of going through something like M&A is you can get a competitive offer, but very rarely do we see the advisor say, like, I'm going with that offer because it's the highest. So they're much more concerned with, is this a great outcome for my clients? And at the end of the day, they want to make sure that new firm, the new advisor, is really going to provide that continuity of support. So the M&A process can give them a nice competitive offer, but what's great is that most advisors aren't seeking to maximize the valuation to the last dollar.
Are most of these succession planning transactions still structured the way they used to be, with maybe a 3 or 5 payout plan, keeping the advisor around in various capacities for that duration of time as they kind of ease them out the door? How are these things structured these days? How has it changed?
Yeah, I think it's the same as earlier, where there's just a lot more options now, right? To your point, in the past, you typically had a full sale and that transitioned over a few years. And now we're seeing, significantly more of what we'd call like that sell and stay option, right? Where the advisors are sticking around for significantly longer than what they would have in the past, and also potentially transitioning ownership over a longer period of time as well. So not just doing a full 100% buyout and then sticking around for a few years, but maybe transitioning equity or ownership to a junior partner or another partner over a 5 or 10 year period. So I think both the time horizon has extended and the structures have evolved as well to just have some more options there. Because what we're also seeing is not just that legacy or succession oriented advisor trying to go facilitate their planning, but also on the junior advisor side, right? Like if you have an advisor that's mid-career, that is a high quality candidate for long-term growth and being your partner. And there's so many advisors on the legacy side looking for that kind of advisor that we're seeing the succession planning extend much longer, so they can lock in that junior advisor so they know they have a path to the eventual full ownership.
Yep. From your vantage point at LPL, diminutive here, but playing matchmaker between
Sure.
advisory firms, what trips people up the most?
Mhm.
What is the thing that will derail a potential deal?
Mhm. Yeah, so we love to look at it through three lenses, any transaction, and so we like to think that there's a financial lens, like how is this the economics of this all going to work together? There's an operational lens, like okay, well, now we're going to combine two businesses together or transition a business. Like how do we think about running and operating the business and serving the clients? And then there's a third lens which doesn't get as much time, but it's that emotional lens, right? Of like you're going to have a buyer that's now going to be the leader of a larger organization and serving more clients and potentially different kind of clients than what they may have served in the past. And on the seller side, you have someone who's long tenured, built a great business, been the leader and the figurehead and the growth person, and now they're no longer that. They're transitioning out, and they're more of a mentor or something like a chairman emerita, or they're just retiring. And so I think where we see a lot of the challenges is actually in that emotional lens. Because if you think about the financial side, that's just math. Like we can put the math together. My team's very, very good at that. That's just more of the core banking side of the world. The operational side, you typically do have construction and process by the time you get to the end of your career, or the buyer at least has probably built those capabilities to support the M&A. So again, it comes down to that emotional side. That's the side that's hard to manage because there's a good question to be asked of like, okay, so from a success standpoint as the seller, what does the day after the transaction look like? And the ones that you see have really clear vision for those are the transactions I think that have a really high degree of success and satisfaction on the back end, right? So if I'm talking to someone and they're super excited about going and spending time with the family or their grandkids, or they're going to take that trip they've always wanted to, or maybe they're going to say, hey, I'm going to spend a lot more time mentoring junior advisors, or I want to volunteer and do financial literacy. Like those advisors that have that clear plan on the back end, those are the deals that go really well.
So yeah, it brings me up to this big spongy question that I always have about culture, right? How to make culture work in a succession plan or an M&A. And I've never really been able to define culture. I don't know what it really is. How do you guys approach that? I guess it's really only through discussion and talking and spending time together that you recognize it or not. I don't know.
Absolutely. Yeah. Time is your friend there, right? It's that old adage, right? Like, would you want to share a beer with this person, or would you want to be stuck on an airplane for 6 hours with this person? It really comes down to there's a level of trust and confidence just in someone that you feel a camaraderie with. So I think from a cultural aspect, I would say it's more of like the philosophy of how you run your business and how you support your clients. And maybe also like how you lead your own internal employees as part of that running your business. And so what you're looking for there, right, is a practice with a good cultural fit, meaning that it's like you have similar philosophies, right? So if maybe you've built your business on being super technical about the portfolio management aspect, right? And then the other party in the transaction, they've built their practice on a totally different philosophy of serving clients, right? Like maybe they're just focused on overall wealth management or generating retirement income. So the way that those two advisors serve and support their clients is probably going to be different. And actually their clients are probably used to a different kind of service. So you could have a mismatch there just from a client perspective. At the same time, you could also have, from an operational perspective, like maybe you have more of like a pod structure inside your practice, right? Where you have different service teams that serve advisors, where maybe the other side has a specific advisor or a specific support person that's assigned to every single account. And the clients may experience that differently, right? So it's all about really like the philosophy of how you run your business, how you serve your clients, and then how do those things line up. One other area that we always want to explore too is things like, how do you feel about growth over time? How do you feel about the planning for your own internal employees? Because what we found too, again, with advisors is not only do they have great care for their clients, they also have great care for their own internal staff and employees that have helped them build those great businesses.
Yes. And this may be a stupid question, but I'm allowed to ask questions. You have all these advisors in your network. You're helping them find succession partners, you're helping them find M&A partners also in the network. As you open up your database there with all of your firms, is there a column for culture? How do you Or is that something that you do just by spending time with these people, knowing kind of, well, intuitively, I know that firm's not really going to work out with this firm, but intuitively, I know that one over there maybe is a better fit? Or is there some kind of formal way that this is inside your database?
Yeah, definitely both, right? So you think of like having profiles of the advisors and their practices, right? So it's all about, for us, like we have to do a really good job of understanding their story and part of that too being their culture. And so that way, because, like we said earlier, you could have 50 buyers show up on a transaction. That doesn't mean it's 50 great buyers. You want to make sure that you have the right partners and you're narrowing those conversations down really fast. And so part of that is the work we do at the beginning side with our buyer support, where we're trying to go really understand what they're looking for, how their practice operates, what makes for a great fit for them. And that way, when we go engage on the seller side of the transaction or seller side of the process, that we can really quickly narrow it down and identify those advisors that would be the best fit perspective, and then to start facilitating those conversations, right? Because I'd say before you even get to talking about the actual numbers, right, you need to have that well, right now it's WebEx to WebEx or Zoom to Zoom, but you need to have that face-to-face conversation just to really get a sense for the other person and how they're running and leading their businesses.
And will you guys at LPL sit in on those conversations, or do you let the advisors go off and hash it out themselves?
It's both. I think typically we do serve and support, especially the earlier conversations, but there is a level at some point where you want to have that person-to-person, leader-to-leader conversation. But we're privy to most of what goes on in those transactions. Again, because we're with the advisors too, if it's just they don't know how to go through this whole process, right? And so we want to be there and support the entire process and help facilitate whatever needs to happen so that we can move through those lenses, right? The financial, the operational, emotional.
But at some point it comes, you two go out and work this out together.
Right. Yeah. At the end of the day, right? Like they're the business owner, they're the business leader, and they're going to make that call. It's our job to get them the right options, the best partners, and help see everything through down a roadmap.
So we've been talking about this in terms of succession planning, the wider universe of M&A, I guess. I think a lot of advisory firms are approaching M&A with the notion of not succession planning as much as gaining new skills or new businesses, to help their clients, right? So
right.
Maybe I'm not good at, a municipal bond strategy, or maybe I don't have estate planning or whatever. Maybe there's a opportunity to merge with a firm that does have those strengths. Absolutely. Are you seeing that more and more? How is that playing into what you do?
Absolutely. Yeah. This called capabilities-based acquisitions is definitely an area that we're seeing a lot more expansion on. You typically see that obviously at a larger firm size, right? Where you have more value you can get by spreading it across a client base. And things that you highlighted, right? Like portfolio management capabilities, tax and estate planning capabilities, maybe some more specific things related to retirement issues. So absolutely, we're seeing some of those firms bring in those specific type of acquisition opportunities because they can then spread it across a very large base with their own existing client groups. That's definitely a factor now.
So you've brought the two firms together. They've made the deal. You've helped them broker the deal. Everyone's happy. What about after the close? What are some of the best practices for integrating these two wealth management firms together? Where do you see that either go bad, or what are some of the things that need to be done after the deal to ensure everyone walks away happy?
Absolutely. Yeah. And that's what I mean, not to beat the dead horse here, but it comes back to the planning, right? It's like great outcomes are supported by great planning and long-term planning. And so it's really just making sure that you've planned and you've visualized, you feel great about whatever that outcome is on the buyer or the seller side. Like we said, of that, the day after the transaction, whether you're the seller thinking about how do I feel now in this role, to the buyer, okay, and how do I feel in this role, having the larger entity and having more clients that I've got to go serve and support. So it really comes down to that planning, like that. We cannot understate the planning aspect of it. Then I think and related to that planning, then it's just being really clear on the roles and responsibilities and the outcomes you're trying to drive, and in what's the rough time frame you're trying to drive it, right? So if you just go, hey, we're gonna merge firms, I'm gonna sell my practice to you, and I'll be done in a year. Like if that's the extent of what you expect, right? You can probably expect that coming up is going to be some differences of opinion, buyer and seller, on how things should be going down. So it's really important. Again, coming back to financial, operational, emotional, just to make sure you've defined out what does success look like, and what are the roles and responsibilities that I own, I'm responsible for, and then when I need to be completing those things. That's the real key thing. I think some of the common roadblocks you see, right, are like I think sometimes it's underestimated how much time you'll be spending with clients for these transactions, both on the buyer side, your existing clients, as well as obviously all these new clients. So you could think about maybe you're engaging with your clients quarterly. Well, guess what? Like when you're bringing a brand new client into your firm via a transaction, you're probably going to be seeing that client 4 or 5 times, or speaking with them 4 or 5 times in the space of a month or two, not over the space of a year. So you just got to do proper planning for even in the initial phases of the transaction of your engagement with your clients is going to go up significantly.
This will be a softball question, and it sounds like I'm setting you up for an easy hit here. But sometimes the problem with advisors transitioning or buying another firm is the repapering process and getting outside of the ecosystem that you're used to and transitioning all your clients over to another ecosystem. How big of an advantage is it to stay inside the LPL ecosystem when you're making these deals?
Absolutely. There's level of frictions for clients and advisors that can impact what we call like the retention rate of the clients. And so when you have to go through a repapering event, that obviously creates more opportunities for clients to leave, or at least to consider other options. And so obviously if you're within the network, then it's easier. You have less concern there. What I would say though, which is really interesting, is like that advisors have built really great relationships with their clients over many times decades, right? And so like we see pretty good retention across the spectrum, whether it's internal or external to LPL. And so I'd say it's more about not so much like, is the repapering process hard, but just like how well can you communicate with your clients, and how good of a cultural fit did you find to this transaction, where it becomes very clear to the clients the obvious answer is that I would be going to this new advisor or continuing with the firm, whatever the case may be. So I think again, it comes back to that planning, and then making sure that you have that great fit, and then I think the results will be there for the advisors.
Final question, and this is just to get a scope of what we're talking about and the scope of the activity, because we've all seen the numbers. LPL, 20,000 practices
Sure.
in the ecosystem. Can you give us any idea of like what percentage are thinking about this or are involved in some stage of the M&A or succession planning process?
Mm-hmm. Yeah, I mean, so the great thing about LPL, right, is that we are the largest network of advisors. And so with that too, we mirror the demographics, right? So like if the average age of the advisor in the industry is like 59, that's roughly similar to LPL, right? So they have the same sort of planning needs and time horizons that you see out there in the industry. But what's really, really special about LPL is just that because we have this really large network internally, we're already talking to our advisors. We deeply understand their businesses today, right? Like I don't have to go out and get up to speed on this practice or on how they serve their clients, or even on who they are and what their story is, right? Like we have amazing relationships with the clients here at LPL, or the advisors here at LPL as our clients. And so that enables us to move more quickly and also find higher quality outcomes for those advisors. So I'd say the planning is very similar to what you see in the industry. I just think there's additional benefits to being here at LPL, where we can, within our call it family of advisors, help really find the number you were mentioning. We can find that great cultural fit, that great partner, that great, whether it's growth or succession, whatever side you're on, we can find that here with LPL.
You don't want to hazard a guess at how many of those, what percentage of those 20,000 are in some process of transition?
Oh, I mean, I'd say it's probably similar to the industry, right? So if a third of the advisors in the industry are thinking about retiring, that's probably similar to what we're seeing at LPL. And so it speaks to that large need and opportunity out there.
Yeah, fantastic. Carter, this has been great. I appreciate it. It's education for me. It's a dynamic part of the industry that you're involved in. And like you say, I don't think it's going to slow down. So thanks very much for sharing the story with us.
Yeah, Dave, it was great to be here and great to talk M&A and advisors.
And this has been the Advisor Innovations Podcast. I'm David Armstrong. Thanks for listening.
This podcast is sponsored by LPL Financial, a registered investment advisor and member FINRA SIPC. LPL Financial is a separate entity from and not affiliated with wealthmanagement.com.